Hello, financial fans. Another interesting week gone by here in 2021, and the market still seems to be going up. The trend is your friend. If it's going up, it might go up forever, but it might not. And I currently am at an all-time high in my portfolio. And in January, during the month of January of 2021, I increased the value of my portfolio by a little over 8%, and that is all stocks considered. Also, I guess real estate is going up in value. Don't have all your money in one place. Be diversified. Be diversified in your portfolio and be diversified outside your portfolio. Maybe have some physical property or collectibles or tools of your trade or whatever. But let's look at some stocks here that look like they might be undervalued right now. Most stocks in the market are probably a little bit overvalued, but here are some that are apparently undervalued. Las Vegas Sands. We'll begin with LVS is the symbol. $55.57 was the closing price on Friday, and that was an increase of about 5%. I do own Las Vegas Sands, so that increased the value of my portfolio also. And down near the middle of first column on the left, 52-week range, $33.30 was the low, $71.38 was the high. So it's still got some headroom. It could be going up. It has not had any earnings to speak of, and that makes sense since the pandemic. This stock would have been hit very hard by that. The 1-year target, bottom of the middle column, $61.77. Hopefully the economy will get going here eventually, and a lot of these stocks that were hit very, very hard, the cruise stocks, the airlines and so on, they might be ready for some increase in value. And at the bottom of the column on the left, it says this is near fair value for the Las Vegas Sands, and as I said, I do own that right now, and I also own Intel. INTC is the symbol. It was down on Friday. It is now $58.18 per share, and look down at the 52-week range. $43.61 was the low, and $68.09 was the high. So it has headroom. It's selling at a volume of 40 million shares per day average. PE ratio, nice, 11.78, which is a number I find to be very acceptable for a high-tech type stock. And the dividend yield is healthy, 2.39%, so that's good. 1-year target, $61, so it's got some room to go there. And Intel does look like it could be on somebody's buying list, and it will probably increase throughout the year, but we do not know. I'm not a financial advisor. The next stock we'll look at is Progressive Corporation. Nice name for a company. PGR is the symbol. $87.47 is the current price as of the closing on Friday. It was down a little bit on Friday. The average volume down at the bottom of the first column on the left, almost 3 million shares a day. The 52-week range in the middle on the left column, $62.18 was the low, $102 and a nickel was the high, so it's got plenty of headroom there. The PE ratio, 9. That I like very much. And the dividend yield, that's very likable, very easy to fall in love with that. That's 5.6% is the dividend yield, and the 1-year target, $100. So if we look at the bottom of the column on the left there, we see it's undervalued. And we move on to our next stock that we're going to take a look at, SLM Corporation. $15.34 a share, 52-week range, $5.60 to $15.48, so we're right near the high right now. 4 million shares move on an average day, and at the bottom of that first column on the left says it's undervalued, and I would agree from these numbers. PE ratio 6.8. That's a very low PE ratio, which is a good thing. The forward dividend, tiny, 0.75%, but at least it has a dividend. 1-year target, $17.41. We shall see what happens with that. That looks like it could be a buy at this price level. And it's a good idea to look for some stocks that are currently undervalued, and I thank you very much for watching.